Chad Brownstein is an oil investor and the CEO of Rocky Mountain Resources. He was among the first to make money off the shale boom way back, and it does seem as though it was way back now, Chad, in 2008. He's in Los Angeles this morning. So if you look at oil, I mean, how much of your approach to investing in oil right now, Chad, is based on an expectation that $57 or $58 crude is or isn't here to stay?
I think we've had an overreaction that's a function of a global margin call. When we gapped down from 100 to 75, it really was a supply and demand issue related to the OPEC strategy of not further reducing cuts. The latest gap down is a function of the financial markets coming to grips with 18 times leverage for every barrel of oil produced. And to give you a perspective on that, in 2008 it was 13 times. In 1997 it was 3 times.
Talk to me about what is driving this sell-off in oil. It is so rapid. Is it based on fundamentals, and how low is it going to go?
Well, it's certainly Black Friday for large cap oil stocks. You want to be grabbing as many as you can at this moment. We had a gap down to 75, which was driven by fundamentals where OPEC drove that. But the gap down from 75 now to 60, soon to be maybe mid-40s, is a function of CLOs having to liquidate.
You and I talked about this last time you were on after Thanksgiving when they didn't cut production. They're trying to smoke out the shale oil producers in this country. How much pain is being felt in the heartland right now, and how much longer can they take these lower prices, do you think?
Well, Bill, you and I were right about OPEC. We were right about the global margin call. We were right about the Russia war premium. Right now, what's going on in the U.S. is that a lot of the offshore drillers are feeling most of the pain currently. Their search costs are $50 a barrel, whereas the shale plays are 15 to 20. We have a position now where we're going to be producing as much as we can as long as the administration allows the Keystone Pipeline and other infrastructure to happen in the United States.
Chad Brownstein joins us from CNN Los Angeles now to talk about all of this. He's an energy analyst and chief executive officer of Rocky Mountain Resources. Thanks so much for joining us on CNN today. So OPEC essentially says, for now, let the market dictate the price, let's not intervene. But just explain for us why the market is making oil so cheap at the moment.
Well, what you're seeing are cascading consequences of a 7-year supply-side story where there was no view on what demand would look like.
Okay, so Chad, then expectation is what? That we could see pain? Or do you think we're going to see red or green? I'm going to put you right on the spot here for the energy space on Friday.
I think the broader question is how oil is being used as an economic weapon throughout the Middle East. You're going to see red for a couple days, but ultimately what the Saudis are doing, they're letting the destabilization take place to their neighbors.
How many oil service companies have no debt? I mean, you're looking for a zebra and a pack of ponies out there, aren't you?
Well, I think as long as you have a company that's not more than 2 times leveraged. So there's quite a few out there that have prudent balance sheets.